morning.
Good morning. Good morning.
Woohoo! Welcome to Coffee Time with Marie Teresa CPA. Good morning, Pedro.
Good morning, Marie. Good morning.
Welcome, guys. Thank you for those of you joining us today, whether via audio or on video live. If you're returning to the show, welcome back. And if you're new, give us a thumbs up or a hands up in the chat so we know you're new. And of course, if you're on audio, you would not be able to do that. So that's okay. Just give us a like and share. As always, I recommend everyone to please go ahead and subscribe, like the channel, the page that you are watching us or listening to us on. Make sure to share so everybody else can learn from the strategies that we use, that we share every Thursday, 10 a.m. Eastern, live on Facebook, LinkedIn, and on YouTube. I am your host, Marie Teresian. I'm a CFO and auditor, a certified public accountant, and chartered global management accountant, and recently certified 10X business coach and speaker. I'm super excited about that. I use my proprietary methodology, Valuation MT, to help businesses who have reached their first million to 10X their profits. And of course, there's an e-course that I prepared for you guys, for those of you who have not reached their first million, to be able to go through the course and start mentally preparing yourself as a business owner and the leader of your company to get to those profits. Of course, I have authored a couple of books: Complete Guide to Business Growth and A Business Owner's Guide to Operational Accounting. You can find all of this on my company page, theprofitlab.biz. Of course, I'm always joined by my tax colleague and my friend Pedro. Pedro, good morning.
Good morning. Good morning, everybody. Good morning, Marie. Pedro Gonzalez, your business and tax strategist. I'm also excited. Tax season is, for some people, is almost over. For some people, we're going to discuss that in a few minutes. It might take a little longer, but we're here to help you with tax strategies. Taxation erodes wealth. We have discussed that many times, so we're here to help you on that front. Cash flow is lifeblood for any business, regardless of industry and size. We're here to help you improving your cash flow. And number three, exit strategies. We're all going to exit. It just depends on how we're going to exit. So we're here to help you developing strategies that are going to help you achieve your financial goals.
Awesome.
We also
Thank
have
you.
issued the real estate investment guide, which is also available for those are there interested.
Yep, and I'm going to be putting in the banner right now so they can download your book. Let's see, I have a lot of banners here. Here we go. All right, so you can download Pedro's real estate guide on pedrocpa.com/the real estate investor guide. All right, guys, so make sure to download that and learn some of the strategies, especially if you're in real estate, of course, or if you're thinking of investing in real estate. Okay, so in the past few, by the way, I have to say it's been today is an actual day, like a whole year, not just like episode wise, but today is exactly a year from the day we launched this show. Woo! So, I mean, last week I said 52 weeks, kind of like a year, but today's actual day, like October 6th, is when we started last year this time. So I'm so excited about this. It shows commitment from both of us, because we've had very busy seasons, tax season, crazy season, whatever you want to call it. But, we have stuck around and we've committed to it because we are committed to you, the business owner, the entrepreneur, because we want to teach you all these different strategies to help you grow your business. So with that, in the past episodes, we've talked about, tax planning, which, by the way, guys, you have to start thinking about this again. It's the last quarter of the year, so we really, really encourage you to do this. You can go back and listen to some of the videos, but make sure to schedule time and we can help you out with that. We've talked about inventory management. We've talked about financial audits, IRS audits. We've talked about factoring receivables. I mean, who talks about these things? You will not
Mhm.
be able to find that kind of video, I'm telling you. We've talked about hybrid accounting. Recently, we talked about purchasing a franchise or a licensee and how to handle accounting on that end. And last week specifically, we talked about shareholder or member capital and how to keep those balances. What are the right structure to make sure you're keeping those balances and then reporting on their tax returns. So today we want to actually talk about disaster situations. I mean, we recently had a big, hurricane go through Florida and all the way up the coast. Hurricane Ian affected so many states. So, and the IRS has released some relief announcements. And then, Pedro, please, everything tax and IRS related. So, if you can, give us a little bit of update on what some
Yeah.
of these announcements were.
Yeah. So we're going to start with the relief announcements. The IRS just recently announced, earlier in the week, last week, actually, right after we finished our podcast, they released relief for the state of Florida.
Mm-hmm.
Yesterday they included now North and South Carolina into this relief. What it means is that for those returns that were under extension already, for the 2021 year. Now they have until January 2023 to file those returns. And I emphasize the word file, meaning that if there's tax liabilities, those taxes are not included for penalties, meaning that you should make those payments because in reality they were due April
Mm-hmm.
18th.
Correct.
So they're not included in this relief. However, it does help for those cases, when you can file your personal and business. I also include business returns. Those, for example, C corporations that on the calendar year that would have, with extension, that would have been done or due. I'm sorry, October 17th. So now they also have additional time to file. That's for the whole state of Florida, for the whole states of North and South Carolina. So businesses and individuals located in those states have extensions granted. That also extends to also nonprofit corporations. It includes also payroll taxes that were probably due as far as the filing uh, October in the quarterlies. You can now have additional time to pay. Now, the payment of those extensions is until October 11th, if I'm not mistaken, but basically next week. As long
Mm-hmm.
as those payments are made within that time frame, the penalties will be abated. If there was tax payments or quarterly income tax payments that were due in that range of time, you gain an additional time to make the payments. But again, you gotta follow the guidance. I will encourage you to contact your tax preparers to make sure when is it your specific situation. You know what I mean? When is it that your tax returns are due for filing for payments and so on. So that's a relief in the midst of all that is happening. People that were some indirectly, some more directly affected by this disaster. Any disaster is traumatic. It causes disruption in the personal and business lives. So this is one way that IRS gives you a little additional time, so then you can file those returns.
Awesome. Awesome. That's very good to know, and I think it's going to be very helpful to those families and business owners that got affected by the disaster. So kind of an extension to this, during disaster, a lot of business owners may have to handle, let's say they may, apply for their insurance to kind of cover some of the costs. So how are these things handled? Maybe you
Yeah.
might want to, explain, how these, payments are handled or reported from a tax
Yeah. Yeah.
perspective.
Yeah. No, that's a good question, and this is something that is going to be an issue now. That again, because of the impact of this hurricane, a lot of businesses. Let's address businesses first, and that
Sure.
their claims and their losses. Um, they're going to have, definitely they're going to be directly affected by the hurricane. Um, and the losses, you have to, and this is why we keep talking about having clean accounting record keeping, because usually what we see and we're going to see in this situation is the better your records that you had prior to the event, because it's hard once the event has already happened. Yeah, I mean, for example, the hurricane, probably
Right.
some of the records could even potentially be lost.
Of course.
You know what I mean? So
Of
that's
course.
why it's so important to have the record keeping, to have backups before the event. And this is why we keep emphasizing this, because it's when events like this happen, is when we are reminded of the importance of the good accounting, good record keeping, and so on. So number one is going to be that. I mean, I'm sorry to kind of keep continue emphasizing, but number one is going to be your
Yes.
record keeping, because that is going to be the evidence that you're going to need then to go to your insurance company and prove your losses. Some of them are going to be physical losses, meaning the structures, but all the other items are going to be, for example, people that carry inventory, equipment, machinery. I mean, things like
Hmm.
that were lost. They're going to be looking at your basis, what is the market value of that property prior and after. And so you have to be able to have all that documentation in place so you can claim your losses. The other area that doesn't, at times it gets missed is business interruption losses. Those are
Right.
losses that are not necessarily due to physical, for example, building or assets. It has to do with your revenue
Right. Right.
generation. And the only
Yes.
way to prove that is, again, how you got to demonstrate your accounting, and how is it that you can demonstrate that this event, I had this stream of income and now has been interrupted or stopped completely, and
Right.
for how long?
Right.
And so you have to have be able to prove that in front of the insurance company is going to challenge you. I mean, we can talk all we want negatively about insurance company, but they will challenge you. I mean, they're
Hmm.
not there to just simply hand you checks just because you call them. They're going to challenge the fact that you have the loss, and you have to be able to demonstrate that I had the stream of income and I lost it.
Right.
um, then you're going to have, in the business interruption losses are sometimes are not caused directly by the hurricane, or could be indirect. And what I mean by that could be, for example, the loss of power, loss
Right.
of
Of course. Flooding or
so some exactly. So
yeah.
sometimes it's not necessarily something. No, it's not limited to what happened to your structure,
Yeah.
but it could
Hmm.
be also caused by, for example, not being able to use your area because of water.
Right.
There's nothing, the roads are damaged. People cannot go to your store anymore to buy.
Right.
All of that is going to affect your business, but you have to document all of that. You have to be able to demonstrate, here's my stream of income, and then here, boom, here's the event, and here's what you can see my decline in
Of course.
revenues is evident, that is connected to this event. So documentation is number one. Number two, you have to file the claim, because if you don't file the claim, then again, for you to file, even for tax purposes, is that you file the claim. If you didn't, you have an uphill battle there. You have to file the claim. Um, and that's going to be also critical when it comes to your reimbursement from the insurance company. The sooner the better. The longer you wait, um, there are going to be potentially challenges on in essence, that they're looking for the prudent behavior of you trying to protect the area. What have you done to protect the area? Is another thing that
Yeah.
I know that they look at. You know what I mean? So, and again, I know that sometimes you cannot have access, but as soon as you have access to your area, what have you done to prevent further damages to the area? So all of
Right.
those actions that you're doing, how to protect the asset that you have
Right.
on the coverage.
Right.
What have you done to protect it? And the other suggestion I have, especially right now, is to have your insurance policies reviewed. One,
Mm.
by your insurance agent, and number two, I highly recommend is an insurance attorney. Somebody specializes in this area, because again, an insurance is a contractual agreement. It's in a contract between you and the insurance company. And sometimes we don't realize that, we might assume that the insurance company is evil, but it just probably could be one. It could be the policy itself. I mean, you probably don't
Right.
have a good coverage. I mean, this is
Right.
what you're paying for. And so the insurance company is reimbursing you actually exactly what is on the policy. Now, you might
Right.
find it unfair because you have this huge loss, and now they're giving you this, what you consider to be an unfair reimbursement, but this is what you signed for. And
Right.
so it's a good reminder, if you were not directly affected, I would still encourage you to have your insurance policy reviewed. One, to make sure you still have coverage. Here in Florida, many people don't realize many companies actually have left the state of Florida, meaning that in some cases, and this might happen, and it's going to be a sad story, a lot of people didn't have coverage. They thought they had it, but they don't have it. And
Mm-hmm.
so this is why, again, on prior episode, we had talked about the importance of reviewing beneficiaries, reviewing your
Yes.
policies, reviewing
Yes.
your contracts, because you might unfortunately discover that you really didn't have insurance coverage. And that's going to be sad because then again, you thought you had it, but you don't have it. So I would encourage everybody to kind of take a look at that and also to understand what is covered. Sometimes you think that you have certain things covered and it's excluded. You're gonna see in the
Yes.
contract
Exclusive.
exclusions.
Yeah. Yeah.
Yeah,
I mean, and those contracts can get very complicated sometimes. So
correct.
it's good to
Mhm.
have someone that's very knowledgeable to let's say, regurgitate, re-explain everything in a more
Correct.
simpler format for you as a business owner to understand. Okay, I am covered. The other thing, something you mentioned was very, very important, is that reviewing your policies every year. Because if you're adding new assets, you buy a new
Hmm.
building, or you
Correct.
bought a bunch of new
Correct.
computers, you added another copier, all of that has to be updated. And if it's
Correct.
not updated, then the insurance may not cover it because that was
Correct.
not in the initial,
Exactly.
So all of these are
Exactly.
little key things that if you don't have the records and you're not updating every time and re-reviewing the policies every year, I did that every year at my employer, and I do it for me in my business too. And it's going to be very important to list your assets and then be able to say, okay, here's my new set of assets, this is the new value. And so that anything that you're covering through the insurance, it's going to be covering everything as
Correct.
expected. Yeah,
Correct.
or at least it's a certain threshold, so then anything that's within that threshold, it's totally covered.
Correct.
Yeah.
The other thing, Marie, is that the many times that they change the definitions of certain terms. You know what I mean?
Mm,
Of casualty, what they consider to be. I remember after the 9/11, what was considered to be terrorism, or you know what I mean.
mm,
So they
yes,
changed it after, and so meaning that what you probably were covered prior to an event, it might no longer be this. They don't define it the same way. So
understood.
you're
Yes.
thinking, you know what I mean. So it's important to
Yes.
have clear understanding. What exactly do you mean by? Because we assume certain things. When you look
Hmm.
at, water damage, well, it might be up to a certain extent, or a specific water damages and certain other water damage that
Right.
might be excluded. So you have to then have a clear understanding what exactly is covered with your insurance. That's why I encourage you to have your insurance agent to review it with
Right.
you and explain it in simple terms, what exactly is excluded and what is excluded. And number two, to have an insurance attorney, especially right now, if you're going to make a claim, is to have somebody to review this, because in essence, you're going to go against this large corporations. I mean, they have the personnel in there, and their task is going to be to challenge your claim,
Right.
the challenges. So you might as well arm yourself with the qualified people to protect you. Just in the same way, I encourage you, if you have an IRS audit, is to hire the right people to represent you in this event.
Yeah.
You already have enough stress with the casualty. Why add additional stress in your life uh, to battle these large corporations, to either gain your proper reimbursement. So I would encourage you to do that, and to gain access to those individuals that are available to help you.
Yes. Yes. Totally with you on that. I agree with you 100%. Another thing you mentioned earlier, and I wanted to bring a point on that, is that you mentioned, showing that you took every type of action to protect the asset. That is really key, right? And I wanted to
Mhm.
share a little, a little bit more on that. So, for example, one of the key things that we help our business owners with is to making sure they have policies and procedures in place. One of those policies and procedures should be on what are your steps when there's a disaster coming, in case of a hurricane, in case of this? What are your policies and procedures? So, for example, well, if a hurricane is coming, okay, we're going to close shop with, I don't know, at whatever time, and the process is we're going to go and secure every asset, cover the computers, blah, blah, blah. If you don't have a policy like that, there's going to be more of a scrutiny as to, well, what was your intention? What is your process? But if you already have that, you say, look, this is the process. We have a policy in place. This is what we do. The whole team gets on and we secure everything, make sure everything is good. All the doors, windows, everything gets checked in, blah, blah, blah. This is the process. And then we leave. Now, anything else happens, then that's beyond our control. So that kind of proves a point that you have been doing everything, not reactively, but you progress, proactively. You have all the systems in place, the policies and procedures, and then, of course, the record keeping is that in addition to what they have as a policy. It's very important to track every single thing that you're doing and in your business, including the policy and procedures on simple things like this. Let's say how to take action during a disaster.
No, that is definitely true, Marie. I mean, again, this is, I know, it's stressful for a lot of people right now. I'm sure a lot of the families are going through hardship right now. Now, the next area comes now talking about the losses is the deductibility,
right?
Because again, we discuss about the relief, the what you could do to at least make your claims.
Yes.
Then the next area is the deductibility of the loss. I mean, how you determine what is deductible and what is not. I mean, from business standpoint, I think it's pretty straightforward. I mean, I think you have to determine what the value, the basis of the item that you're losing in the case of physical items, and then compared to the reimbursement. In the case of business interruption losses, you have to then demonstrate the decrease in revenues that you can attribute to the event. You have to look at the coverage, and this is another thing. I wanted to going back to the coverage is business interruption losses. Sometimes they have a limited coverage under the normal policy. Sometimes you can gain riders, add-ons where you can, so you got to check all that because you might have coverage and you don't even know it. So look at that. Now, continue with the deductibility of the losses. Then, the business, the individual. Now, there was a change in starting 2018, that losses, casualty losses, were no longer deductible for except for federally declared losses. So in this case, this will qualify. So I want to remind people that under, since 2018, you probably were certain casualty that may have happened to you. A tree fell on your roof for some reason, and now you had to replace a roof. Under other circumstances, it could have probably be a casualty loss that you could have deducted. And that's not the case anymore, except for federally declared losses. So in this case, the Ian event that will qualify, that means that you should follow the procedure to document your losses prior to the event and then after. I mean, so take notes, take documentation of what damages were caused to your property, including your residence, and then document that. And if there's any decrease in value of your property, there's some specific, I don't want to get into all the details of that, but I can tell you if you have questions, concerns about the deductibility, I would encourage you either to contact your tax preparer. I know we are available. You can email, Marie probably put somewhere in there the email. Yep. Just email your specific situation, your specific questions, and we might, we will review your case. And or if you have a specific question, we can certainly cover in a future discussion, a podcast. If you have something very specific that we can probably cover. But I can tell you that what is important now is that even for individuals, you can deduct federally declared loss for casualty losses. In this case, in the state of Florida, North and South Carolina, for sure can declare those losses that are under personal residence, and you can declare those losses. Same thing follows the procedure and the deduction. One thing that I wanted to briefly mention that, I know that, it becomes a little convoluted for some people exactly how you calculate it, because basically what the law says is that you have to look at your basis of the property, and you got to also look at the decrease in the fair market value, and that tends to throw off some
Mm,
people, because then, okay, so what exactly, yeah, and that's the way that the IRS writes it. But basically, what you have to do is first you got to look at the basis of your property prior to the event, at that
mhm,
moment of, let's say, when the event, in this case Ian, happened. And then you have to look at the decrease of market value of that property, meaning you have to know what the market value of the property is at the time of the event, and then decrease. So if you have just a simple example, hopefully will clarify this concern for some people, is if you have, let's say, an item that it has a market value, call it, I don't know, call it 350. So that's the basis prior to the event. Then you have to look at the market value of that same asset prior to the event. And let's call it
mhm,
for now, I don't know, call it, I don't know, call it 275. So that's the market value of that item and the market value after the event, the casualty. So let's assume that it was totally lost, so it's zero.
right.
So then you have, let's assume that your reimbursement, then the third item you got to look at is the reimbursement, the insurance reimbursement. So let's assume there's 200.
Mhm,
So you got to, and what it says is the lower of in essence, what it is telling you is the lower of the reimbursement compared to the basis, and the reimbursement compared to the decrease. So you got to look at the 200 compared to the 350 that I said for the basis, and the decrease in the market value from 250, I think that's what I said, to zero is 250. Then you got to compare the reimbursement. In this case is or 275. Okay, so 275, it went down to zero. So my loss, initial loss is 275, but then I received 200
mhm.
reimbursement. So in that case, my loss is 75 compared to the loss I would have had with the 350 minus the 200, 150. So my loss in this case is 75.
So we take the lower of,
The
comparing
lower
the
off,
two
exactly.
numbers. Right.
So yeah, when you go to the code, it's a little more convoluted because people
Oh
get
yeah,
in a little
they have
loop
to
and
make it complicated.
but once you understand it, it becomes a little, at least a little more kind of, I see what they're looking here. You know what I mean? So that's why it's important that your tax preparer has at least an understanding about how to do this, because mistakes are made. So what they'll do is like say, okay, 350 minus
Mhm.
the 200, my loss is 150. They forget the other part that the tax code is telling you. So if you get audited, they're gonna say, no, oops, oopsie daisy, you claimed the loss that is higher than you should have, and then an adjustment. But I wanted to throw that there because I know a couple of the questions I have received is the amount, the deductibility, but then how to calculate the loss, and I hopefully that explanation of 3 or 4 minutes will help.
No, that's definitely helpful. I know it
At
gets a
least in
little
my attempt,
complicated, and I see
yeah,
your face getting all serious when you get into the numbers.
I know.
So,
Yeah.
Washti says maybe you do an insurance checklist or tips each June, and maybe with an
Mhm.
insurance agent, like some type of a
Yeah.
checklist that should be very, very, very helpful. Yep, that's a great
Yeah.
idea, Washti. Thanks for sharing. I love the
Yeah.
interaction from the viewers.
Yeah. No, it's a very good
Yeah,
idea.
if you have any questions,
Yeah.
guys, always be sure to send us an email. You can send it to me or Pedro. My email is marie@marieterosiancpa.com. You can also send it to pedro@pedrocpa.com. So we are always ready to answer more questions for you. We could do it on the show, or if it's something you want us to do in person with you, then we can schedule a call with you and answer your specific questions on the call. So with that, can't believe it's already 30-minute mark.
I
So
know.
wow, that was an interesting conversation. uh it's all about, I think, it seems like, every time we're talking about different things, it always comes down to, and we repeat, record keeping, record keeping, record keeping. We just
Yeah,
can't
yeah,
stress
yeah.
this enough, guys.
Right.
And, whatever stage you are in, you are less than $1 million, $1 million, $2 million, $5 million, $10 million. The bigger you get, the more documentation is going to be required from you. So you might as well start doing this while you're still at a smaller business and entrepreneur. Just write down what you're doing in a simplest form, and that's totally fine. You can always make it all fancy after when you have more people. But it's important to keep records in the right way. Keep a listing of all your assets. Keep a listing of all the different insurances that you're paying. What are the limits? Keep a small simplified schedule. Insurance number 1, 2, 3, 4, blah blah. Deductible. What the coverage timeline is. So simple things like this can help keep you on track. And one of the things I wanted to say before we close out is, a lot of times when we live in areas that there's a lot of disasters. Let's say in Florida, we get hurricanes all the time. Make sure you have a secondary location maybe in place. Make sure all your records are made on the cloud. I know I was working with a lot of IT people back at my employer, so I had to implement a lot of these disaster recovery situations, policies, and then if anything were to happen, how are we going to work, off-site? So way before COVID, we already had all of these things implemented. So with that, I would say make sure you have a secondary place where you can actually start up the engine and not have to lose so much revenue. And just make sure that you check in on your employees. Everybody's doing great. If they're able to jump in and work, and they can work, so the engine never really stops. So these are all stuff that you have to think through before any disaster happens. But if you were to get hit right now this is still a good time to, as you recover, make sure you put in place all these little key things to help you before the next disaster. So with that, guys, I always leave you with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope we are 2 of the 5 people you are spending your time with to learn and grow your business. Until next episode, have a wonderful and a blessed rest of your week.
Wonderful. Take care.